Hey guys, welcome back to this YouTube channel. I promised you all a recap of Thursday's trade. This is a pretty simple trade. I did make a longer reel. Unfortunately, it only gives you 90 seconds on Instagram, so I decided to make a YouTube to show you guys the details of what I was actually looking at. Here we have Euro on 4 hour. And you can kind of see what we have going on here. So here we filled a weekly gap. From that, we got this reaction where this closed a bearish wick. The biggest thing I want to note here is the size of the bearish bodies compared to the bullish bodies. You could almost say there is more bearish momentum. The daily shows the same thing. It's all wicks to the upside. Even right here, you could see you have continuous push to the downside from a very valid level. We also hit our projection from this pullback here, so we were actually kind of expecting a reversal somewhere in here on the daily. And I think the weekly level was more up here. So we weren't sure where we were going to reverse, but this was one of the levels that was very highly probable for a reversal. All we needed was more data. Now, if we go to the 1 hour, you can see the same thing once again. We filled that weekly gap here. We came back, we tested this wick. You can see the momentum we have here with these 3 bearish candles, 1 pullback. Again, momentum down. Now, what I want to note here is you have this range. So this is kind of your big range at the time. And you have this range within a range. You can tell here that we balanced this range. In doing so, you have created another range. And basically this happens, balances another range. So now we have a new range created here, which goes from here to here at the time. And once again, price balances this range. So what this tells us, with this push down and all of these ranges being balanced, there's not really any need for price to come back here. Was there a probability price could come back and sell from higher? Yeah. We had one area here I was willing to sell from. I was willing to sell if this wick got run. And then I'll show you guys what actually happened during New York. And the last thing I wanted to note too is you took out these lows, just the wick. You took out these lows, you took out these lows. So when I'm reacting from a valid level, like here we filled that weekly gap, that's a valid level. I now consider this an edge. So when I'm reacting from an edge, I consider wicks rejecting. When I'm just reacting from taking out newly created daily lows, I don't really consider that an edge anymore. To me, these wicks are not rejecting, they're actually reaching. And the way you can tell is if I look on 4 hour daily, there's nothing really here. There's nothing really here. Like there's no valid levels to react off of. Our first level to react off is Asia highs, then you have the daily low. So somewhere, and then you have this liquidity just below the daily low. So this is kind of the first reactive zone. So any reactions I get here, I'm going to consider these wicks reaching. Now, what solidifies this fact is the fact that every single time we create a range, the ranges always kept making lows, but none of the range highs got run. So this pretty much reinforces the fact that we have a bearish push, which lines up with the daily projections. So now we're looking for that daily pullback. So I get to the chart around 4:30. So we gotta fast forward a bit here. All right, let's see. Okay. So, ideally at this point, I was wanting to sell here and I was wanting to sell from these points. Neither of these points got hit. Next thing I want to point out is the size of the bearish candles, even on the 15-minute. And again, you have this bearish push. So we know we're selling. We just had a few levels that we're willing to sell from. I did see this. This is not a valid sell for me, so I pretty much had to let price go here, unfortunately. So I would have got to the chart somewhere around this candle here. This isn't a valid entry within my trade plan. So we pretty much had to let price develop. And now at this point, I'm either looking for a range rebalance, or if there's momentum, I'm going to look for a liquidity mitigation. So now we're still wanting to go down, and on the lower time frame, or 15, we have this range now. So within this range, we are looking for either a balance of the range, or we're going to look for a mitigation of liquidity if the momentum continues. When you get something like this and it wants to break through, you can be a little more lenient as long as you have a level of liquidity to take out. So here we have breaker liquidity. So we took this low out, and at the same time we pulled back and we mitigated. So now I need these highs to basically get taken. Hold on. Actually, yeah, that'll work. So these highs need to be taken out, and basically once these highs get taken out, we can execute a trade. Now, if we go down to the 5-minute, you could see ideally you could say you wanted a balance of 50% of this last range created. This actually all lines up, and I'll show you guys here on the 1-minute. So I need this level to get taken out properly. Alright, so here we take liquidity out with a wick, which I'm not a big fan of. We got a bearish candle, and basically here we take the wick out with a wick. So now this is a proper run on liquidity for me. Now something just from testing, I know historically that Euro can have 1 or 2 manipulations on it. So you definitely don't want to choke the trade. Now our targeting went to the first level of reaction, which is this level. This was a very conservative target. It probably could have held to the daily lows, but that's totally fine. And basically from this target, we have our liquidity, we have the 5-minute leg balanced, daily 4-hour, 1 hour all says sell, 15 minutes says sell. So from here, it's just a matter of waiting. Now, Fed now got released at 7 o'clock my time. So once that happened, it melted pretty quick. So you guys can see it went to target pretty quick. And here you can see we had that extra manipulation on the initial reactions. Initial reactions that take liquidity, I would say half the time they are inducement. So I always give those trades a little more room. Whereas if I got in here and and I took an execution here, I don't need to have as much coverage now, because at this point, if the initial reaction has been manipulated, the chances of a second manipulation are a lot lower than the first manipulation. So that's basically the idea of the trade. Very simple, very systematic, very mechanical. There's no guesswork. Literally, we just read what the market showed us, and what the market showed us is that the sellers are outweighing the buyers right now. We are also showing a creation of liquidity for the future, which is this whole trend line down. So yeah, I hope you guys got some value from this. Definitely subscribe to this channel if you haven't. I will be making more videos in the near future. And for those that are wondering, yes, price kept melting. It did end up taking those daily lows out, which was the kind of next reactive area. So that was pretty much what we got. So like I said, very conservative target, and went there really quick. Anyways, guys, I will see you in the next video. I'll see you later.